Some levels work because of charts. VWAP works because of paychecks. Every single day, billions of dollars of orders get executed against this one line by desks that are graded on beating it. Execution desks keep their clients by filling orders better than VWAP. That's not an indicator, that's a benchmark with money behind it. Once you understand who's using it and why, the way NQ reacts around it stops looking random. By the end of this video, you'll know exactly where that line gets defended and when to leave it alone. VWAP is the volume weighted average price. In plain English, the average price actually paid for every contract traded today. Every trade contributes its price, weighted by its size. 1,000 contracts at 21,500 move the average far more than 10 contracts at 21,530. Start counting at the open, and the line updates all session long. That's it. One line that answers one question. What has the average buyer actually paid today? Above it, today's average buyer is winning. Below it, they're underwater. Don't confuse it with a moving average. A moving average treats every candle the same. A quiet 5-minute bar counts exactly as much as a bar where 3,000 contracts changed hands. VWAP doesn't. It weights every price by the business done there. And unlike a moving average, VWAP is anchored. It starts fresh at the session open and builds from zero. Yesterday doesn't bleed into it. It is today's story and only today's story. Here's the part that makes VWAP different from every other line on your chart. When a fund needs to buy 800 contracts, they can't just hit the market, they'd move price against themselves. So they work the order through an execution desk, which slices it into hundreds of small pieces spread across the day in proportion to volume. The goal? Fill the whole order at or better than VWAP. The desk gets graded on it. Billions of dollars are executed this way, every single session. VWAP isn't watching the market. VWAP is the market's report card. And that's exactly why price respects it. Big buyers work orders below VWAP and stay patient above it. Drift too far under the line and those buy orders get aggressive. They're beating their benchmark. Stretch too far above and they back off and the bid thins out. Multiply that by every desk running the same math and you get a gravitational pull back toward the average. Nobody's defending a level. Thousands of desks are just doing their job. The magnet is the incentive. So the first read is dead simple. Where is price relative to VWAP? Above it and holding? Buyers paid up and they're in control. Dips into the line are getting bought. Below it and staying there, the average buyer is trapped underwater. Rallies back to the line are getting sold. It's the fastest control check on your chart. One glance, one answer. Who's winning today? Coming up, the two setups actually worth taking and the trend day pattern that punishes everyone who fades it. Around VWAP, plot standard deviation bands. Don't let the name scare you. It's just the market's normal breathing range. The first band is ordinary movement. Price lives inside it most of the day. The second band is stretched. Statistically, about 95% of the sessions trade happens inside 2 standard deviations. So when NQ tags that second band, you're watching something unusual. Not a signal by itself, but a location where reversion gets interesting and where chasing gets expensive. Setup 1. The first test. NQ opens at 21,450 and drives straight up to 21,530. VWAP climbs underneath up to around 21,480. Then the first pullback of the day comes into the line. That first touch is the cleanest one. The buyers who missed the open drive have been waiting for exactly this. Let price arrive. Let it react. Confirm it with order flow, absorptions soaking up the sellers at the line, or a delta flip back to buyers. Then trade the hold with a stop below the reaction low. Don't buy on the way down. Anticipating the touch is how you catch the days it doesn't hold. Setup 2, the reclaim. Price loses VWAP, trades under it, and the breakdown sellers pile in. Then it turns, pushes back through the line, and holds above. That's a failed breakdown. Everyone who sold under VWAP is now underwater, and their covering is your fuel. Confirm the hold with order flow, aggressive buying, absorbing the retest, not just a quiet poke through. The reclaim and hold is the trigger, not the first poke through. Wait for the retest to hold above the line. If it does, the trap shorts do half the work for you. Now, the exception that pays for everything else. The trend day. Price opens, leaves VWAP behind, and walks the first band all day long. It never comes back to the line. If you saw the TPO video, this is the same trend day, thin and stretched, just viewed through a different lens. On these days, VWAP touches don't mean reversion. They barely happen at all. The rule flips. Don't fade anything. The pullbacks to the first band ARE the trade in the direction of the move. Fading a trend day because price looks too far from VWAP is how accounts die. 3 traps. 1. Trading the chop. If price is crossing VWAP every few candles, 5-6 times an hour, there is no control to read. That's not a setup, that's noise. Stand down. 2. Anticipating the touch. Entering before price actually reaches the line and before it reacts. Let it arrive, let it prove something. 3. The late day fade. VWAP gets heavier as the session builds. By the afternoon, it barely moves, and touches mean far less. The best VWAP trades happen in the first half of the day. One rule holds all this together. VWAP is location, not a signal. It tells you where price is relative to the only average with real money behind it, who's in control, who's trapped, and whether today even has a readable structure. It will never tell you when to click. Pair the location with your trigger, order flow, a failed breakdown, absorption at the line. Location plus confirmation is a trade. Location alone is a guess. That's VWAP, the average with a paycheck behind it. Anchored to the session, weighted by real business, and defended by the incentives of every execution desk in the market. It pairs with everything else on this channel: auction theory, profiles, order flow, all linked below. Subscribe and join the Discord. Links below.